Good morning, this is Simon with Trade and Perform Coaching with the ES Market Preview. Important disclaimer and reminder for all traders and investors, the webinar is for educational purposes only, not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with the money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, what that says is you can lose a lot of money if you don't know what you're doing. Make sure you know what you're doing. So, the most important area where we've been getting strong responses over the last 3 months has been the mid, right? It's been the mid of the gap, right? So the half gap and the top of this structure almost match. So I'm going to add just an area which basically brings you to 2436 to 2435. This is the area, even though it's in an unauctioned area, this fills an open gap. This also aligns with an open gap that we gapped above when we pushed higher yesterday. We gapped right through that open gap. This should act as support the first time in. It's also a stretch from 47 down to 35, which would put us in the 12-point rotation range, right? And we've been getting responses consistently from 10 to 12-point rotations. This becomes my highest odds location, okay? With the understanding that it's in an unauctioned area, but the data tells us from the last 6 months, the last 3 months in particular, that half gap has been finding responsive buyers. I would expect responsive buyers from that point. Let's see what else I've got here. Okay, additionally, what's the price action that we expect when we get in here, right? So as we re-auction, somewhere between the bottom of this candle and the top of the open window, which is the top of the gap, or the low from yesterday, I would expect a response back up from this area, right? So and from that point, it'll either push back in, that'll be at that point a 7-point rotation, and from the overnight perspective, that'll be almost a 12-point rotation from Globex high into this location. I would expect that we see a response first time in here and attempt to push back in and re-auction this area. The market is going to treat this like two separate areas. Poorly auctioned, unauctioned, and then back to poorly auctioned right into this location right down here. So that's what, in the process of getting underneath here, if we fail in the morning to get back or hold above, if we fail to hold above this 44, 45 area, really it's a little bit higher, but generally this 44, 45 area. If we don't find immediate responsive buyers to push us back in and we hold underneath, I would expect an initial attempt to push down to between that 38 and that 40 area before we find responsive buyers for a rotation back up. If we fail to gain traction back to the upside of that point, and we'll know, right? And we get in here, I would expect this 35 to create a response. If we can get into 35 and then we can trap back above 38, I would expect a push back to mid and the potential to close back on the day balanced and back towards that 24.45. Again, several things have to line up here. So this location, if I get tick divergence, for those of you that are new, I'll cover that in more detail, but if I get a strong negative tick or I get a consolidation and they try to break the base here on a strong tick and fail to do so, meaning you get structure, you get several bars like this, and on a strong tick they try to push down, and either that bar closes back in to range, leaving a wick or a hammer, or we close below and then we close back in. From this location, I'm going to look for a push back to the mid, right? And then from this area, I really don't need an excuse. I'm pretty much looking for responsive buyers here. I'm willing to take a loss. This has just been worked. This area has worked consistently for the last 3 months, right? And then finally on this gap fill. So if you look at this gap fill, the volume structure is actually back over here. So here's the challenge with this location. This is gap fill, and it's a big stretch, right? This is from 47 past 37. This puts us in 15-point range, right? I am looking for an excuse somewhere from here to here to get long. If I take the long right at the gap fill, I understand that it might respond off that gap and still push into the volume, right? And the reason for that is, okay, if we go to the TPO, which is price by time only, not by volume, right? And we go to, let's go to the 24-hour chart, right? So that open gap is sitting at, again, I don't think we're going to get down there today, but I want to cover it just in case we do, 24.3150, okay? That puts us right, let's erase this so y'all can see this clearly. 24.3150 puts us right here, approximately. Okay, that's value area low for off the TPO, but you'll notice there's only a small volume nodule, right? And if we slip behind that, that puts us right into this, what I'll call a local TPO point of control. This is the point of control, but it's already been auctioned over, and we busted right through it, right? So this brings up that 34 area. And if we're looking from a 24-hour perspective, right, really this shifted, the point of control shifted up here, right, and shifted up here. So if I was going to bet money today, the way I would bet today would work is that we're opening at the bottom of this area. We're going to push back up into where the majority of the time was spent, and we'll have either a pause or a rejection. If we fail to get above, right, which would make sense, we're going to auction, is that we're going to come in and re-auction this area we spent no time in. So my guess is what we're going to see at the end of the day is some process that looks like this, right? Okay, what I'm looking for, since we're at the very top of the range, instead of trying to take these shorts, which may or may not work, right, I'd have to see a very specific price action to help me with that, is I want to see the pushes back in, right? Now this can work on variation. I want to be clear, right? The one I'm shooting for is first time in here and the response, right? The second and third times in, I'm going to need evidence, tick divergence, a heavy tick push, and fail to break. Otherwise, right, see that open gap sitting right there at 31, and there's what again I'd refer to an untested local HVN on the TPO. I'd expect to push in and a response back up. And then if we get behind it, you see what I meant by the volume. There's no strong volume area. It was just okay on that day. And there was no strong time spent in that area. It's just okay. It's not, and you can see we auction through these when they're not really prominent. We can auction through these areas pretty easily. So then let's go look at the daytime. So everyone's clear, right? This is the area I want to take a shot from to the long side initially, this 39.37, which aligns with our chart with the 40.38 zone right there, right? And that's if we get underneath that white. And then also, I think that aligns with that. And then right behind that is the half gap, and then the gap and the open gap. And then there's a naked volume point of control at 24.34. Let me cover this again. Sorry, guys. Okay, I expect a response here. If we get behind here, right? See this zone from 36 to 34? I hate stacking zones up like this, but we had to. They're both support areas. Okay. The mid of the open gap is sitting here at the open gap. There's a naked volume point of control at 24.34. I want to be clear. I expect a response here. Okay? If I take it at 36.50, I have to be prepared for it to push back all the way to 34. And at this 24.34, my goal is to front run this area by 2 to 3 ticks. Okay? So I'm shooting for the open gap because everyone's going to see that naked volume point of control. Buyers are in control. They're going to respond strongly from there. If this fails, this open gap is okay, but you have to be prepared for it to push back. So it's a big stretch, but just mentally you have to be prepared for the possibility that it could stretch back to 26.50. Again, this 24.27 and a quarter is a naked volume point of control. Bill, please correct me if I had those NVPOCs in the wrong area, but I'm pretty sure I've got those nailed down. Okay. These are the two most key locations, and I expect each one of them to get front run by the market because again, ES has no weakness. I don't expect to get back to this one, and it will be lucky to get back to this one. And if I can get to this 24.34, I want to be clear about this so everyone understands. If I get in here, right, the mid of the open gap, this NVPOC, I will scale lightly out of this area because I expect us to do something like this in the afternoon and end up with a balanced day if I get here. This is my key location for the day right here. Okay, if it gets busted, this becomes my next key location, but I don't expect this to happen today. Okay, and then lastly, from the open, we're trading at 22.46 1/4. If we clear yesterday's high, right, I want to be what I'm looking for. The next highest odds setup will be, let's get a blank chart. We all use this because it's easier to see. Again, all my focus is on the long side as opposed to the short side. Okay, so if we open up, I'm going to assume we don't have an open drive. I'm going to assume we go for open auction, which means we'll check prices on both ends, right? We have an impulse move above first hour high, right? That 50-60 back, that is my target as long as it hits prior to 1 p.m., right? About 1:15 is as late as I want to get into this thing, right? For a push back up to the upside. After 1 o'clock, this trade becomes risky and of sweeping the range and getting a sell-off at the end of the day. Okay, so it'd really be better if we hit this before 11 a.m. The reason for that is two things. I expect a rotation out of here to take 30 to 40 minutes. It's just been the pattern that we've pushed up. I'd like a negative 600 tick, and I'd like it not to close behind the 62 retrace measured from swing low to swing high, right? That's if it's perfect. Your stop, your ideal stop, right, has to be 1 point below swing low. Most guys I've been working with, y'all have variations on that based on what this potential stop would be. But if it's a reasonable stop and 1 point behind swing low, there's no reason to try to get cute and adjust it behind the 62 retrace, particularly if the range is narrow. The overnight range is the narrowest range we've had in over 2 weeks, I think. And certainly for a Tuesday going in. Other than that, we're looking for the normal 5-minute tick divergence. Negative 600 ticks. I expect responses back up. I'm going to look to see NQ. We have 2 minutes to open, so I want to just touch on NQ really quick because it's in an interesting position. If we look at the NQ chart, and I purposely left a wide view on that last night. Okay, see how we double topped here? We pushed up a little bit, but if we fail to clear this, that's why I left the zone behind instead of making it the high of the day, this 91 area. If we fail to clear this 91 and we trap back in, look how much poorly auctioned area there is underneath. And NQ took some technical damage, right? So if we look from high to low on NQ, look where the 50-60 is, because that's pretty much what we've come into. Okay. We've come right into the 50 retrace. Now, again, there's no fundamental news to cause that breakdown in NQ. That was just everyone hitting the exit one time. But there was no driver, which is why we've popped right back to the 50 retrace. So the real question becomes, can we get behind the 62 retrace, right? And do we get above it? Again, I'm letting the first couple minutes go so I can see what the open looks like. I'm not in a rush. Do we get behind that 62 retrace, which would be normal, right? We stack up shorts at the 50 retrace, we squeeze them to the 62, maybe a little bit behind, and then we push behind afterwards and push lower, right? We don't have that resolved and we won't know yet, and the odds are is that we're going to come back in at a minimum and re-auction some of this poorly auctioned area on NQ, and then build some steam for a push back to the 62 retrace would be my guess, right? Again, the mid of the half gap is an important area on NQ over here. It basically is the crest of that swing high that was broken, so it would be a retest of this area. You should mark it off on your calendar, and we'll do it right here, but it's this little area right here. See this? Right here. Okay, that's the mid of the unauctioned area. The mid being measured as opposed from the half gap to the top, from the swing high to the gap. That's the truly most unauctioned area. And that generally gets a response, and I'd expect a response there. It'd also be a first punch into that unauctioned area. we'd expect a response back up from that first time in, right? It would also be a stretch from 57.67 to 57.20. If buyers are back in control there, a 40-point rotation would be normal to the downside, right? Where you'd expect rotation back. On the other hand, if they slip it right through here, we'll know. We'll see what NQ's doing out of the gate, right? But I do expect buyers are in control, which is why I'm totally unfocused on the short side of the trade. And so I want to jump back to yesterday real quick now that we've covered that. Does everyone understand clearly what my trade plan is? Does anyone have any questions? I want to pause for a second to make sure we're clear on the areas that I want to take. Short of an open drive lower and the market falling apart in the first 15 to 30 minutes, that's the plan I'm going to execute today. Exactly as I described, those areas are what I want to take. I consider this area weak. This area is the first area I want to take, and then this area is where I want to stick the trade. I'm going to give it 20 seconds. Anyone to pop a question in? We're testing Globex Low right now on NQ. Again, I think Globex Low landed in a horrible place, so I'm not in a rush to take it. Let me throw in the NYSE tick real quick. Spread this out so we can actually see it. And make sure you get the opening prints, guys. Those are scalp locations on both of those. Let's do that really quick. So I'll adjust them in just a second, but opening print is roughly right there. Really? Not really. Right there is going to be the opening print, roughly. That's the hurdle to the upside now. Same thing on NQ. Backside test should meet initial resistance. I would not take that short, by the way, on NQ. On the backside test, what's the reason for it? We're above the white zone and above Globex Low. Okay, so this is when you know when not to take that backside test. You have a support area right underneath, right? So if you're going to short that 57.70.50, you're going to get trapped up. You're betting that that Globex Low is going to bust, or you're going to get caught in a ping pong between those 2 points, right? So really what you're looking for is a break above and a backside test. You have room to stretch. You need to get underneath the white zone to have room to stretch underneath. Same thing on ES, right? You're going to get caught in a ping pong area between... For those new guys, ping pong doesn't mean anything. It's just how to describe the action, right? You're going to get caught between two key points that traders are going to be battling over. You want that, if you're going to use that as a trade location, you want clear area to push above. Now, I want to point out something here. We've come up, see how we have three areas, guys? Sometimes it usually doesn't set up like this. We have Globex Low, we have opening print, and we have yesterday's volume point of control. Let's talk about this for just a split second. Insert symbol tick. Sorry. Tick is neutral, I bet. Oh, negative 626, even better. I definitely wouldn't want to short that. Okay, so we get caught in this a lot of times. How do you weigh this? So I can do this really easily so that everyone can clear up their decision-making process. Okay, the opening print, the VPOC, or the 44 3/4. The Monday's volume point of control has the most importance. We need to clear above it, backside test to push higher. Otherwise, that has the highest resistance. And if I was going to look for a point to short, again, because these are all stacking up against each other, it makes that whole area kind of a cluster. And you can see them whipping it through there trying to figure out. Think about your opponent, what they're doing, right? Some people are looking at the opening print. We all know that's a high odds trade when it's by itself in an independent area, right? Some people were looking at the volume point of control. That's always a high odds location. I always expect a response, counter response the other way when we get to those volume points of control, and that's exactly what happened this morning, right? And then I think of the three, Globex Low has the least amount of importance on the opening rotation, right? It's the easiest one to pass through, particularly when it lands nowhere, which it did, right? They were just using this swing low as the holding point, but there was really nothing here from a volume standpoint or a time standpoint to hold this up, in my opinion, right? So in this area, I know this morning I need to wait till we clear. If I want to get long, I want to push through volume point of control and then get a backside test to push higher, right? And there's plenty of room higher. Look how poorly auctioned this is, right? So keep that in mind. That's, when you have that in your notes, what will happen is people will have a setup for each one of these. When all three of these are stacked up in a tiny little area, which is the result of having a compacted range overnight, right? Don't force your trade in that area. We'll have other days where each of these are in clear, distinct areas, or they'll line up with each other. Like the opening print will come right at volume point of control. Or if you short the backside test of the opening print, understand that you're going to have to survive a test of the volume point of control to the backside for a push down, and you're going to have to survive that into a poorly auctioned area, right? That's a trade I would not be eager to take in the top fifth of the range, right? And the same would have held true opposite, right? So you can picture this. The same would have held true the other way. If we had opened up here and we had pushed down, right, I would expect to push back up. And then if, let's say we'd opened up here and now it's a big rotation into the opening print, then I would expect a counter rotation. Now that this has been tested, you'd be cleared to push through here, right? Or vice versa, if we'd opened up down here, failed the Globex low, but backside tested the open print, that would have given us room to volume point of control. What you want to be able to do is look at it and say, is there a roadmap to letting my trade get a stretch so that I can assure my 2 points are in the bag, right? That's what you're trying to accomplish, right? So when you look at it in the morning with a calm mind and you go, hey, all this is kind of stacked up so that almost no matter how I take it, I end up in a blender, right? So if you look at it and go, each of those points could cause a counter rotation in the opposite direction. This is a perfect formula for getting chopped up and blended. When you combine that with a negative 600 tick at the top fifth of the market, right, you're just going to see the market work its way through here in an open auction and get chopped. So that's easy. Don't worry about it. Let them work out the first half hour, and then we'll have a clearer idea. We already know our ideal location is below, right? So I want to go through yesterday really quick because I didn't get to do a trade review. Does anyone have any objections? That means this screen will not be up. Okay. The twins wore me out last night. Eden would not go to sleep to save my life, and then I ended up being up here at midnight trying to get the charts taken care of. So, okay, yesterday, I want to go through this again, right? It's really easy to map out on a checklist. Gap up. We know large gaps, if they don't fill in the first hour, they're unlikely to fill that day. Number two, so let's start from the first 5-minute bar. And I said this in real time, right? First 5-minute bar, we have this on recording, it's there. I said, if we don't break the low, that's an easy pass to a trend day up. If you're an aggressive trader, this is your first location, particularly once we clear the opening print, right? And we had noted prior that for the last, I think 6 out of 8 days, the opening gaps or any open put has had a push down. That is candy and bait for weak retail traders to come in and short, and they're going to get caught. And that's what this bar is right here. Those guys try to short this press right here and take the rejection of Globex high, and they all covered at once, and then cash shorts came in behind them to continue the drive. We noticed the difference in the open here. We actually got the 800 tick. So this was the first trade in the most aggressive entry. You had to be willing to tolerate a potential half gap and a stop and still be willing to take your high odds trade, which would have been in this case the open gap and the naked volume point of control, right? So even after that first 5 minutes, we would have noted, hey, if we can't get below that 5 minutes, we're definitely in a trend up, buyers in total control. Failure to get half gap or gap fill, buyers are in control. I don't want to look short, right? So the next trade this sets up immediately is the 0 tick trade, which occurs on this bar right here. This is picture perfect for an open gap trend day up. As the broader market, NYSE tick, pushes lower, the price on the S&P 500 pushes up. This is not divergence. This is a sign of strength, okay? As soon as we get back to 0 tick and the market neutrals out, that's because the NYSE broader market's going through its opening rotation here. First 0 tick is right here. So when this bar printed, right, and then the next tick here, the opening of this bar, which was right here, was at a 0 tick. That was your long entry, okay? Stop 2 points, initial target 2 points, leave a trailer up for the rest. This entry, which was 41.50 to 41.75, depending on how Johnny on the spot you were on clicking the mouse, right? Even at the worst entry, it was all the way up here, at 44 3/4, right? You got your 2 points almost instantly, and it pushed all the way up to 50. So this is worth 9 to 6 points, depending on where you pulled the ticket on this. You had two choices of stops, 2 points, which over 80% of the time, that 2 points will keep you within that trade, right? No negative 200 tick, or your hard stop had to be, if you're using wider stops and using a mental stop to keep this out, 1 point below swing low. That 5-minute low never got penetrated. You had trend day up. And then you'll notice here on true trend day up, so two characteristics. First of all, Monday usually leads to balance. Notice after the first hour, right, what does the market present you with? Balance, right? 50-60 from high to low never gets tested until this morning. That's where we pushed into yesterday's mid of the 50-60, right? Never gets tested, and that's as it should be. If this had occurred on a Tuesday, Wednesday, or Thursday, odds are this would have continued to push higher, and we would have been up 25. Then paying attention to your extension up. I mentioned when we were up here at plus 15, the market has a very hard time, even under the best of circumstances, except at the bottom third of the range, right, when we're getting pounded and we have these huge 40 and 50 point ranges, right, that has a very hard time extending more than plus 15 to 20. It gets exhausted. I tend to look for shorts when we're not at the very tippy top of the market, when we're up 15 to 20. So if you look, the next part of this plan was the first negative 600 tick, right? This came pretty damn close to that negative 600. I said and I showed an example from February 9th, and I adjusted that to negative 400 to 600. That gave you two choices of location, this location or this location. This got you in a little bit early and you had to take some heat, right? This got you in perfectly, and it gave you another opportunity for an extension from 44, eventually all the way up to 50. I mentioned on this trade you're going to have to give it 25 to 45 minutes to get an extension because we were going into balance and chop. The same's probably going to be true for today. If you get location, expect it to take a long time to grind up through here because we're in balance, right? So this is all repeatable, right? This is a model that you can use going down the road. You should have this dissected. Each of y'all should have this dissected so that you can, the next time you get a gap up, you have all these structures in place so you understand what you're looking for to pull money out of, right? And then finally, we get another 600 tick right down here. That puts us in this area. You'll see it's very common to get that first push. We ended up with tick divergence right here on the 5-minute. That's highlighted right through here. This is exactly what we're looking for today. I'm not drawing this very well. 5-minute tick divergence through here. 5-minute tick divergence. Finally, last rotation, by the way, Brian caught this. Very nice trade at the end of the day for rotation up from 46 all the way to 52, right? It didn't matter whether you entered at the initial, when we got close to negative 600, at the negative 600, or at the tick divergence. It didn't matter where you chose to enter it. That trade and in that environment will tend to pay out. And then you see the end of the day, when people try to push for that high, they all got swept. And Brian targeted the high of the day, and he sent me a message. He blew out as soon as we hit the high of the day. It's pretty much a perfect trade. He took his first scales at 2 point. He lets his trade stretch up. And even though he had computer issues where he didn't get paid all the way through this, and this is in, me and Brian have been working for a long time. That zero tick trade right there is in Brian's wheelhouse. He has it. He knows that's the trade he's going to take, and he is having computer issues. He didn't let him throw him. He took some time to recompose himself because it's frustrating when you have a high odds trade hit and your computer's not working for whatever reason, right? And then he ended up getting paid at the end of the day, and he didn't sit through here and try to chop himself. Additionally, if you'll notice on this push up to the high, right? See the push up to the high? See the tick divergence as we push up into the high? That's a great sign that you should just be laying out the rest of your trailer. And if you're uber aggressive, this is a new highs, right? If you're uber aggressive, you can take the short. It's not my cup of coffee, but you should have been, if you were still trading through the course of the day, it was fine. I want to add one last note. I had a monster day right in here between this. I was 3 for 3 in this area. I took the open here. I took the zero tick, and then I took this negative 600 tick. Okay, so, and I had NQ out of the gate. It was a monster day for me. It's Randy's zero tick, but that trades in what? It was originally my zero tick. Hold on a second. Okay, no problem. It is Randy's. Randy's done all the work on the zero tick, but it's actually zero tick is my trade. I just don't have this. I just didn't run the stats, but Randy ran the stats on this. So you're correct, Ron. So it is an 80% win rate for the last at least year on zero tick in this exact scenario. Tick is greater than positive 800 off the open. We push up while tick pushes down. This is a very high odds trade, but I just didn't see your comment earlier, so I apologize. So the point behind this is there were numerous opportunities through the course of the day if you stayed settled. For me, I was 4 for 4 at this point. I had 3 ES trades, and I had one monster NQ trade, and I was just simply too high, as probably everyone noted, already in here, and that's before I got this trade. I was already king of the world at this point. I had to step away. I'm highly likely to make a trading error, start over trading, or take a trade and swing for the fences and try to get it back. And that does not benefit anyone in the room or myself. That's why I took an extended lunch. I just had no intention of touching the keypad again. It's really important that you kind of get some kind of read on where you are psychologically. I know I get too down when I miss a trade, like Friday where I missed by a tick. I get too upset, but I also know I get too high on the other end of the spectrum. And so my adjustment for that was to simply stay away from the markets and the keyboards, so I make sure I walked out with my day. My goal today, a lot of times additionally, is I know I won't probably come anywhere close to my P&L that I had yesterday. I made that okay for myself out of the gate. I'm not even going to swing for that. I've refocused, let go completely of yesterday, right? I've learned everything I have to learn. I took detailed notes yesterday. I went through and autopsied this to death. Right? My goal would be to stretch myself into the afternoon setup next time, assuming we don't tack that 50 retrace. My goal would be to set up so that I get one more trade out of the afternoon, but I was just too high to take that trade and manage it reasonably. I recognize that and I stopped. That's a very important part of not going through a boom-bust cycle, and I suggest all of y'all keep kind of an EKG for yourselves of how you're feeling. And the best way to do that for me is when I'm meditating, okay, I get a very clear signal of how I feel when I'm balanced, right? I know how I feel when I'm balanced and calm, so I can become very aware of when I'm becoming agitated or too aggressive and too high, and that king of the world BS that I'm the best trader ever walked the face of the earth, kind of thoughts that roll through your head. My job is to get rid of those. So let's close the 16th down so we're not just grabbing data left and right. Let's close yesterday down. Let's go take a look today. So what have we done? We opened up. We ping-ponged between Globex low, VPOC, opening print. We backside tested opening print. ES is leading us to the downside as opposed to NQ, which is odd given the recent structure, right? So this is our first support zone. Again, it's in a poorly auctioned area, but the market's strong. So you can see automatically now, as soon as we touch the peak, see how the computers are responding to that right off the top. That's all I want to know about my support zones. I know my key areas is first this 44.50, this 40.50 to 38.50, right? Followed by this location back here, this NVPOC, and the open gap somewhere in between these 2 points, right? But what I care about here, and this is an important distinction, guys, when the market is strong, as ES is, traders are going to take any zone and they're going to take it, right? So everyone gets confused about this. If the market were weak, let's say we broke below that 24.12 and we started flushing, so this zone is likely to end up holding even though I'm not taking it. I'm not taking it because I don't like to take weak zones, not without some kind of evidence like a negative 600 tick or tick divergence or something to help me, or a 10-point stretch into that location. From the open, we only have a stretch from approximately 47 down to 43. It's only 4 points in an environment we've had 15 to 20 point stretches. I can wait, right? If that means I end up missing this, I'm okay with that. Why? I don't want to take the trade here and have it go boop 10 points, take a stop, and then have to take my trade again in my key location. I'll do it. If I take this trade, I'll be mentally prepared to take the trade here, but I would feel like crap having to do it, right? So very easy for me. Pause and go, okay, let them work this out. The way I would have taken this when it says weak, the tick would have been negative 600 or been showing me some kind of negative tick divergence or 10-point stretch. Otherwise, the only reason someone wants to take this is because they're on the cutting edge of aggressive, or they're reading the NQ and saying, hey, NQ is not punching the low, ES is punching the low. That's divergence between the two markets. Again, it's the first 30 minutes. It's too early for that read for me. Okay, but it is valid. NQ is not hitting a new low, ES is, right? I want to see who's going to win this tug of war. And then the last piece is, you know, if this ends up working, right, I've already written down in my trade plan, I'm not taking this location, right? I'm not taking that location because I don't want to get swept in the first 30 minutes after having a big day, and I know it's a weak zone, okay? So if that zone works, I'm not going to come back and punish myself for not taking the trade. I'm going to stay focused on the highest odds areas, right? $35 seems high odds with a 50 retrace. There's a zone right there, brother. That's what I said. Brian asked about 35 seems high odds. It is. 35.25 open gap, mid of open gap, and VPOC. Everything you possibly could want is sitting there. We'd be lucky to get this. I'm begging the market. Please give that to me. I will take a full stop at that area with no hesitation. I'd take that trade 1,000 times in a row without blinking. There's no question about that, right? So, at any rate, guys, when you don't get the mid here, okay, when you get to this area and you're trying to figure out if it's going to work or not, so the way you do that is you decide if you're fine taking the stop here in the first half hour and you're okay taking the trade here with the stop here, you're cool. Take the trade, right? Came right off the top, just as it should have, right? But if this gets stopped and you're not going to take the trade from here, you need to think about your trade plan, because this is a 24-hour TPO point of control, untested in the RTH, held on the 24, very likely to get a response out of it, and it's a stretch from 47 right into 40, and we're clearly just going through an open auction process here with a slight downside bias, right? You're very likely to get a response from here, and what you're going to end up doing is if you take the trade here and it stops, and you don't take the trade here, what the conversation will be like is this: I took this location, I couldn't get my 2 points out of it, took the stop, and then I was uncomfortable taking the trade again because I took the stop. Then in that case, the way you should prioritize that is you should skip this and take the stop over here. If you're going to put your capital at risk, this is where you want to put your capital at risk, and you can't do both. And that's exactly what I'm doing, by the way. I'm taking the trade there. I'm not taking it 43, 42 because while it's support, it's weak support. That's my trade plan for today. And NQ is non-confirming either way. And this is, by the way, when people say open auction, that is perfect open auction. We're just testing prices up and down. There's no conviction either way. If we clear that opening print on NQ, I look for a backside print to push where? Into Globex high and back into this 91. But we're in a precarious position on NQ. Really what we would have been ideal is a gap and hold above 91, backside test and push. But market doesn't give us ideal. And there's no energy behind this, by the way. You know, we get a negative 600 tick and it results in -3, right? And what that tells you is after the first hour, we're highly likely to grind back to the upside and squeeze shorts out. People are trying to be aggressive and think this is the top. And as long as that first hour either, one other point, right? When it's slow like this, so just like we have IB high, let me stop the recorder. I've covered enough in the preview.